Welcome to the Greater Central Florida Multifamily Investor Group, where we focus on investing where it makes sense. Hello, everyone, and welcome to the Greater Central Florida Multifamily Investors Group meeting, where we focus on investing where it makes sense. I'm your host, Ismael Reyes, and this group's goal is to learn from and help each other do multifamily deals with a focus on Greater Central Florida assets or potential investment partners. We are here today to talk about a very exciting topic and what many see becoming prevalent in the not so distant future, the tokenization of real estate. Our special guest, Yael Tamar, is joining us all the way from Israel. Thanks so much for joining us. Yael, how are you?
I am good, Ismael. Thank you very much for having me. Thank you.
No, it's my pleasure, and thanks for making the time. I know it's quite a bit later than we are here on the East Coast of the U.S. and Florida, but thanks a lot. And what I'd like to do, really, essentially, just turn this over to you. But before I do that, I just want to introduce you to the group so they get a lot of folks actually know you. You have a fan base, which is nice, it's good.
Yeah,
but there are some
really
people
nice
that are
unexpected.
What's that?
It's nice and unexpected, but also kind of, gratifying because we've been trying to educate the market about this. So it's exciting, be the fans of SolidBlock,
Yeah, you've got a new fan, by the way. So I'm here. I'm a fan. So let me go ahead and introduce you to the group for those that don't know you. So Yael Tamar is co-CEO and co-founder of SolidBlock, an issuance platform and marketplace for property-backed digital securities. Yael has co-founded several fintech startups, a successful marketing company in the blockchain space, and acquired an import-export company, quite a bit there. She is also a regional co-chair at the Foundation for International Blockchain and Real Estate Expertise, the leading international network for exchanging knowledge within the real estate industry. She is regularly invited to speak worldwide as an expert in blockchain, real estate, and fintech. And I agree, it was tough to get her on the show, but I'm happy. Yael, I'm super excited again to have you on my show to discuss how multifamily investors, syndicators, and fund managers can capitalize on real estate tokenization. So with all said, I'll turn it over to you, and I'm going to be taking notes here.
Awesome, for sure. Okay, so, guys, this is just basically a talk about how we tokenize step by step for those who are just starting out, and learning about this concept. If you want something in depth and, advanced, I'll be happy to do another one of these. I also have a full course called Tokenization 101, and, anybody who's interested can reach out to Ismael and get a 50% discount. Happy for, everybody to take a course and learn step by step. In depth how to get this done.
Ooh, I'm taking you up on that one, Yael.
Yeah, absolutely. Especially because I didn't make it to the previous meeting, for which I'm super embarrassed and apologetic. No, but I'll give you guys everything twice over. So, okay. So what does it mean to tokenize an asset, basically? What is this word tokenization? Token is not a new word. It's been used in the industry. In the IT, basically signifying a digital version of something that's not, could be digital or real world, right? We have token representing data, we have tokens representing like security keys, a bunch of different things, right? So in this context, in the era of blockchain, token and tokenize basically means two things for us. First is to securitize, and second is to digitize. Right. So what does it mean to tokenize an asset? Well, first and foremost, if we're talking about a large asset, large commercial asset, you divide it into shares, right, that you can sell to investors. And these shares are called securities, right? So if you're selling one asset to multiple parties, you are selling securities, right? You're no longer selling, a real estate asset like you do, a single family home or maybe even a commercial project to one buy. So that's the first step, securitizing. And a lot of, there are a lot of sponsors out there that are really familiar with this process, the securitization process. There are different regulatory regimes that enable securitization of private, of private companies. You don't have to go public in order to sell shares. And now the coolest thing about what's happening, for the last 10 years is that we can trade, not only buy these securities, but also individuals, investors or funds, whoever bought the securities in the initial offering can actually trade them afterwards, even though they're not public, right? So they're not selling on New York Stock Exchange or NASDAQ or anything like that, but you can still trade them, right? So that's basically the law, now the law of the land, that the law in the United States that came out after what's called the Jobs Act, which enabled trading of these private securities. So that's the first step, right? Securitizing. The second step, and that's the technological step that came with the advent of blockchain, is digitization, right? So we have these securities that are normally paper, PDF, or maybe your name is written in some sort of a database that the owner of the asset holds, right? Which is not a secure way to store anybody's ownership, right? If you ask me. So the most secure way really in the industry to denote an ownership of something right now is the blockchain. So, but how do we what is the process of writing the ownership on the blockchain? We'll talk about that. But basically what you do is you create these tokens. And remember, a token is generally a word that represents, another asset, whether, it's real estate, whether it could be painting. I'm sure that, especially now in Miami, you've heard about Art Basel and the NFTs. So, an NFT is a type of a token that represents one specific asset, right? One buyer per asset, usually a non-fungible token. Usually it's not something that you can interchange. One painting doesn't equal the other. Now, in case of real estate commercial projects, in fact, if you're dividing, an asset into 1,000 or 10,000 or 1,000,000 arbitrary pieces, one piece usually equals the other. So these are fungible tokens, and we call them security tokens, right? So security tokens or digital securities, right? So they're secured through the immutability of blockchain, and they're tradable. Now, how can you trade them? Well, you can find, we can list these tokens on these smaller exchanges. They're alternative trading systems, really, that have special licenses. And we can list them there relatively cheaply, right? Not like NASDAQ or New York Stock Exchange or just the general, IPO for a public REIT, it would be. But, you can list a single project on an exchange. That's one way. Another way is over the counter. If you know a buyer personally, or if you find the buyer online, for example, you can get a buyer to log into a platform like SolidBlock for the purpose of going through identification process. It's called KYC and AML, Know Your Customer, Anti-Money Laundering. And then after they go through these processes, they can go ahead and buy your token, right? So you can actually avoid even any sort of an intermediary, right? The only intermediary that you have to go through because of the regulation is their intermediary that validates your identity, right? So that's pretty much it. That's what tokenization means. Tokenization means securitization and digitization. So writing ownership on the blockchain. Now, whether or not NFT falls into the category of tokenization, in my mind, yes, it does. So tokenization technically could mean just issuing tokens on the blockchain, right? When we create an NFT, we do not securitize at the moment. Although, not to make matters super confusing, but there have been NFTs issued that are actually securities, right? When the owner said, okay, the reason why we're issuing these is because we believe that the value of these tokens is going to go up significantly. So we'll just go ahead and call them securities to avoid any issues with the SEC, right? So that's basically what you do. When you securitize, you announce to the SEC that we're issuing these securities to investors of a certain type, right? Could be accredited investors, for example. We're issuing securities to accredited investors. Here's the mini prospectus, the private placement memorandum. These investors are aware of everything that they're entitled to. And that's basically what you do when you securitize. You announce that you're issuing a security. So the real estate world is big, $300 trillion in property value, but only 1% of that today is tradable. It represents a huge amount of opportunity. If you look at the private equity world, right, the corporate, right, corporations, companies, shares, it's quite the opposite. The majority of the private equity out there is, well, not private anymore, it's public, right? If you're looking at companies, the majority of it is public equity, right? And the private equity is much smaller. So, you know, this is really interesting that you can actually easily buy shares of many, many companies out there, but you cannot invest in a specific asset, right? You can mainly invest in a REIT, right? That's what's easily done today on the stock market, but the assets themselves, you know, they're not so accessible. Imagine that you would want to invest in Amazon and you were told, no, you cannot invest in Amazon. You have to invest in all of the cloud solutions out there, or all of the, you know, marketplaces that come together. So tokenization enables us to pick and choose the projects we invest in, that we identify with, and also not get stuck in one project for many years. You know, come in and out of a project as you please, and as the liquidity in the market allows you to do, right? So I mentioned the Jobs Act, which is in 2012, and that created the path to where we are today with tokenization. Blockchain was the second step, right? That completed the picture, because without blockchain, it would be difficult to trade. You know, blockchain enables quick trading and, you know, intermediary-less trading, right? Disintermediated, that's the right word. With COVID, you know, in the last 2 years, we've seen a lot of investors coming online and investing, right? So money is being moved from one place to the other much more frequently. So we feel that the market is ready and the interest for tokenization has increased. So in a nutshell, tokenization makes investing much more accessible. It enables smaller tickets, simplifies transactions, creates secondary market, and creates new business models. Because now that the real estate is in this digital format, you know, it can be easily collateralized to offer loans. You can do what's called staking, and it's basically providing interest on, you know, just by depositing these tokens somewhere. You know, you can basically there's certain companies out there and applications that will provide interest for you to, you know, placing tokens somewhere. And then additional products like derivatives, you know, options, futures, index funds, and so on. So we're entering a really, really interesting world where, in general, you know, look at all the tech companies. They all want to be financial technology providers, all of them, payment providers, right? Google, Facebook, which tried, didn't succeed in America, but going through Europe. But Amazon, right? So almost every single company out there wants to participate in the payment and in the financial system, right? So real estate is no exception. Property can be a financial product. You can also support payments through the blockchain. You can actually conduct payments with the asset-backed coin within your own ecosystem of assets. You know, imagine your internal frictionless ecosystem where payments are going through, through your system, makes things much easier than using different system of credits and trade finance and all of that when that's running on the blockchain. So tokenization helps asset and fund owners raise capital more efficiently. So you can use this as a fundraising tool and give investors unprecedented access to private real estate investments, which are transparent and liquid, right? So let's review. So tokenization enables fractional owners to buy and trade real estate assets, right? So you take the rights to the asset, convert it to digital tokens, which can then be traded, right? So the process through which we issue the tokens is called security token offering. So as I mentioned, the STO needs to be compliant with the appropriate regulation. If we're talking about the US, it's going to be an exemption rule for fundraising without a full prospectus, the Reg D 506C. And we can also use crowdfunding regulation and technically also Reg A+, but it takes a long time and slightly expensive. Reg A+ offers us to offers this security to even retail investors up to $75 million. So then these tokens at a certain point after a lockup of 1 year in case of Reg D 506C can be potentially sold on an exchange, right, compliantly. How do we tokenize? We go through a setup process. First, we set up a vehicle. It's most likely the new vehicle because we normally don't tokenize 100% of the equity in the project. Well, first of all, just to make it clear, most of the projects just tokenize equity because in senior debt is just there. It's not getting tokenized. We're talking about the equity size. Now, and most of the time, we do not tokenize 100% of the equity because we want the owner to keep some skin in the game. This is usually not a process for selling an asset. This is a process for letting other LPs, limited partners, come in and in a passive way enjoy what the asset has to offer, whether it has dividends or whether it has interest or whether it is expected to go up in value, right? So in the case where you want to sell a full asset, one asset to one buyer, as I mentioned earlier, an NFT could be an excellent choice where, if you don't want to go through the headache of moving the asset on the title and just going through the whole process, you can do that through an NFT. And there are companies that are actually doing that today. So it's set up vehicle, right? That vehicle will have an agreement to buy a certain amount of equity in the project. So it will own equity in the project directly, or it could own equity in the project through another holding company, right? The less holding companies, the better for investors, but that's also a possible structure as well, right? Especially if we have several properties underneath. So then it's easier, of course, to hold them through a percentage of a holding company. Next step is to onboard all the investors, right? So if a lot of sponsors will come to SolidBlock and say, well, we have investors and friends and family and the community that is ready to invest. Like they want to invest in our projects and we need a good vehicle to do that. So tokenization is a great process for that. If you have a network of investors, have them come in onto the website, register and pass initially through KYC and AML. KYC is a know your customer process. They have to upload their ID. AML is anti-money laundering, so it's done automatically as well through the ID. And then there's also accreditation process where you have to prove that you are an accredited investor. That's the requirement of the SEC, right, for buying securities. And that can be done literally in a few minutes, right, with the newest technologies that we have for that, like where you scan your ID and you scan other documents, right? So once investors are on and they, pledge their investment, you got enough pledges, and actually the money has been transferred and sitting in the escrow account. Then we create the token. We distribute the token. We use what's called a smart contract, which is a blockchain tool, a blockchain program that will outline the rules of the investment, meaning if you bought or if you transferred a certain amount of money for a certain number of shares, right, the price of the offering, then you're entitled to a number of tokens, and then you're also entitled to sell the token with certain rules, right? So that's a smart contract. It's sitting on the blockchain, right, and it's being deployed on the blockchain. So then the investors that put their money in, they're getting a certain amount of tokens in their wallet. Now they don't even need to know anything about what wallet is, where it is. It's just basically it's sitting on our system, or similar platforms to SolidBlock. They do different things. We provide an institutional grade secure custody of the security tokens, and every time the user buys, we place their tokens there, right? They see it on the system and it's secure. Other platforms may have different mechanisms where they will ask you which wallet you want your tokens to go. So then your tokens are sitting in your wallet. There might be a lockup. After the lockup is lifted, you're free to trade. And so you'll trade on the platform. You will select, if we have several exchanges where the token is listed, you can select which exchange to go to or go to default and trade the tokens there, right? So exchanges, when I say exchange, what I mean basically is an ATS, an alternative trading system. And these are FINRA registered institutions that sometimes partner with asset owners to list the security, right? So, and we can use several of those. Let's talk about the Aspen Project because it's an interesting project. It was the first commercial real estate tokenization. We at SolidBlock did the smart contract for this project. And it raised $18 million pretty quickly because it's a landmark project. 18 million tokens were issued. Now it's listed on T0. It was trading initially at a 20 to 30% premium after launch. So it was a really good exit for the initial investors, right? So what does the future hold? The future holds, in my mind, every single offering is going to be tokenized. And then on top of that, we'll see a lot of DeFi, decentralized finance opportunities in this market. And as I mentioned, happy to do another session just on what decentralized finance means. But in general, that's basically all kinds of new products and services that are associated with the world of blockchain and crypto and finance, right? So different financial products. So our goal is to increase liquidity. We believe that once liquidity is increased, any sponsor who's sitting on equity doesn't need to be doing so, right? You can sell half of your equity to investors. You can still get the management fees. You can still get the carry, but you now have cash. You can multiply your income by putting that cash to work, right? Because stable assets that have already been built and that are just basically income producing, that you can have other investors invest in that, and you can basically deploy cash in something that will bring you higher income than that sort of an asset, right? So that's the premise for tokenization, that we'll see 3, 4, 5 times more projects getting financed because of this constant movement of capital through the system, and from institutional investors to accredited investors to retail investors, and again, right? So basically a cycle of capital. I think that's all I kind of wanted to share with you guys today, and happy to answer any questions. Ismael, I think you sent me a few.
Interesting. The first one, do you see SolidBlock moving to other platforms that charge less fees and are able to do transaction at a higher rate, such as ADA, Solana, or will it be made available on multiple blockchain platforms?
So I think that at the end of the day, we're going to be using the blockchain platform that is most that is easily connected to exchanges. So right now it's Ethereum and Tezos. I think a lot of new exchanges and custodians are implementing Solana. So we're watching closely. So just for the basic knowledge, like why does it matter which protocol we're using? So right now, Ethereum is the standard because it's most developed in terms of code and template and stuff like that. However, it does have issues with scalability when it comes to fast trading and the costs of trading. So that's where additional blockchains that are being developed that are from the get-go supposed to be more scalable, that's where they will be handy, right? So we're going to keep watching closely which blockchain to implement. And in general, for us, the way we built our platform is a matter of a language in which we code the smart contract. And then, if our exchange partners have implemented other blockchains, then we'll be happy to provide smart contract compatible with that blockchain.
Great. The next question, will the distributions, I guess it's a question about how the distributions work, particularly if you have a hybrid model. Do they just get additional pieces or fractions of a token for distributions, or do they get, somehow get some other way to get money via regular banks? How would that work?
Yeah, so actually this is the way the systems are set up today is that most of the systems is that you can actually get fiat, like regular money, as a payment. And in fact, the money comes from the asset managers that will receive it in fiat anyway, right? So they will send the money for the distribution, and then we'd send it further. Now, the issue with fiat distribution is that it costs money, right? The wire payments cost money and time and effort and so on. So the way we're handling that at SolidBlock is that we convert the cash into a stable coin and then distribute stable coin to everyone's wallets. Now, not everybody will be withdrawing their cash every month, right? So by the way, we did entertain an idea to ask you if you want to get more tokens, but of the same kind. But the problem is that they may not be available, right? If they're in high demand, then where are we going to get more tokens? So, this is a finite number of tokens we're talking about, right? So yeah, so at this time, we just put a stable coin into everybody's wallets. And if they want to withdraw it in US dollars, they can do that. They can basically, it's an exchange, it can be exchanged for US dollars. Now, another thought is that eventually we're going to be issuing our own coin, similar to a stable coin, backed by the portfolio of assets on our platform called Solid Coin. So we'll likely be paying out the dividends in Solid Coin as well, and that's where we can also give bonuses. That's where we can give different points and have a little more flexibility there.
Excellent. And in projects, the next question, in projects where you may have, it's not a stabilized asset, but it's what we call a value add, where you have one set of financing, and then at some point, once you stabilize and you jump into something longer term, how does that work with the tokenization process?
It's the same. So you're saying that you're going to be developing an asset. It's not a yielding asset. I guess it's not a cash flowing asset, which is fine. You can still issue a security. Normally, investors would want you to have some piece of the puzzle already in your disposal, like, for example, land. Then you own a land and you just want to build on top of it. You need to get your initial permits before you get a construction loan, for example, and you're raising funding for that. Maybe the investors will buy a piece of land as a part of this offering. That can happen, right? So what I see in the market is that the investors prefer more, less risky and more cash flowing assets at the moment. But of course, it just depends on the community. If the community is behind the specific sponsor and has trust in the sponsor, I don't see why not. Like, this could be a really interesting offering to actually raise money for acquisition of assets or raise money for development of assets.
So in essence, if we refinance an asset, it would go out, any capital that goes back out to investors would just be distributed just like any other distribution, whether you want to put it on stable coin or that piece we just talked about. So it'd be the same. So it wouldn't be new tokens being created on a refi.
No.
Okay.
Well, that's actually, Ismael, it could be interesting. It could be technically, because refi could come from DeFi. Refi could come from a decentralized finance world as well, right? You could have a group of investors or lenders who can actually buy the asset based on whatever valuation it's going to have, in 5 years. And then we don't know what's going to happen, frankly. Right now, it's not the practice, but it could be you actually burn all the initial tokens and you issue a new token, right? So to the new owners or new lenders, right? So, but the initial investors who held on to the token or who just bought it before that sort of refi, right? they will basically get cash, right, based on the value of the asset at the refi time. Yeah.
Got it. Oh, that's perfect. Yeah. And it's usually when we refi, it's the senior debt that you're refinancing.
Yes.
So in that case, it would not be the equity, but yeah, there's so many ways that you could go with this. I mean, I think that's what has a lot of people interested in learning more, because it's such a different way to work real estate, assets and to do these acquisitions.
Right. Yeah, absolutely.
So you already mentioned how safe the technology is. This is more for probably on the passive investor side. It sounds like there is, institutional grade security. I know, you always hear these weird stories on, let's just say, Bitcoin, where somebody somehow gets some Bitcoin stolen and this sort of thing. But it sounds to me like when you say institutional, that's something that it's insured.
Yeah.
How does that work?
Well, I just did a podcast actually with May Michelson from GK8, which is our custodian, and it's worth listening to that.
Okay.
It's worth listening to that. It's on Spotify and Apple Podcasts and so on. My podcast is called Block Solid, so it's the opposite of SolidBlock. But in a nutshell, the way that they do security is by basically and not allowing the token to be stolen at all. Like, it's not literally stored anywhere. It's, nobody has the keys. Multiple parties have the keys, but the asset is being stored through what's called an MPC, multi-party computation. So it's a combination of what's called a hot wallet and a cold wallet. A hot wallet being like an online type of a wallet, and a cold wallet is the hardware sitting in somewhere in your office. So it sounds slightly complex, but I think in 30 minutes with Maya, I kind of went through it all and explained. But the bottom line is that your tokens are secure. You're not going to lose your real estate. And at the end of the day, we are a platform and that is currently centralized, that we can, if there is some sort of a theft involved in that, we can reissue the token with certain proof of ownership. But if you are receiving USDT, for example, as your means of dividends and interest, again, that money is not sitting with us. We're not a payment provider or intermediary. That money is sitting again in this institutional custodian, where there's still no keys to be stolen, and it's absolutely theft proof with highest level of insurance. That's what I understand from GK8.
Excellent. So I guess just two more questions. One more for the syndicators that are out there listening. So let's just say I'm going through a raise or going through the process of figuring out how I'm going to do a capital raise for an acquisition. Let's throw a number out there. Throw a sort of realistic number that we have on an asset we're currently raising in Tallahassee. It's 136 units, and we're raising $6.5 million for this project. How easy is it to sort of get the amount of people on these platforms to be able to, let's just say we wanted to split that and we want to do $2 million on SolidBlock. What kind of numbers are out there that are looking at these projects right now? And I'm just trying to get a sense of the volume that's going on.
Yeah. So this is more of like a crowdfunding size raise. If you look at the crowdfunding market in the US, it's looking really good lately. And there are many investors that are looking for these products. And at the end of the day, it all comes down to, is this project something that investors are interested in? Now, the tokenization piece is basically a bonus for them that they can then trade later on, but it's not enough of a bonus for them to invest in something that they normally wouldn't on any other platform. So that's basically, and I think it's realistic to say right now that you can raise a few $1 million on a really good project, experienced sponsored and so on. We also partner with several crowdfunding platforms that where we can place the project and then for the project to gain some attention and momentum.
Excellent. Good. the last one, and I know we started with this, but just to make it a little bit more specific for those that are wanting to know more, like myself. How do people find your tokenization class? You mentioned that there was an introductory class of some sort.
Yeah.
If you want to just give a quick bit on that, and then just send me the email or the link more specifically, and I'll make sure that we post it. But can you tell a little bit more about what goes into that, or what they expect to get out of it?
Sure. I mean, this was done for a mix of owners of real estate or investors in real estate. It has basic explanation on what blockchain is and how it works, and a little bit on the real estate side, different models of real estate and financing and so on. And then basically, I'll just show you where it is. It's 10 hours and it's 10, I think it's 10 or maybe 9 sessions. They're quizzes, and you can go on our website actually on solidblock.co and you click on Tokenization 101. No, sorry, you click on Learn Tokenization course. That's the place. And then there's a syllabus here, quizzes and stuff like that. And that's basically how you register, right? So and it's $299, but we're giving 50% discount to everybody listening today, which I will send to Ismael. So that anybody wants to take the course, I'm sure you'll hear from Ismael to and get the discount code. And if anybody has any questions, feel free to find me. I'm everywhere and accessible, on LinkedIn, on email at Yael at solidblock.co. And on LinkedIn as Yael Tamar, Twitter at Yael Tamar. You can also, message us on any of our social media platforms with SolidBlock. Happy to cooperate, and definitely happy to speak to anybody who is interested in learning more.
That is fantastic. Yael, thank you very much for your time. I know that it is late where you're at, and I can see that obviously this is something you're passionate about, kind of like me, and I'm looking forward to learning more, because I just see that's, like you mentioned, this is kind of where it's headed. And for those of us that are in this business of acquiring assets through syndication or some other exemption, this is a way to really broaden your business and then be able to acquire more assets and bring those to market. So I'm looking forward to learning more about this, and I just can't thank you enough for your time.
I appreciate it. Thank you for inviting me, and good luck with everything.
Thank you, Yael.
Thanks.
Appreciate it.
All right. Thanks.